Let's talk money. Whether you're just starting out or looking to sharpen your financial skills, you're in the right place. Welcome to Tech Monetize Official, where we break down complex financial topics, like options trading, into simple, actionable steps that anyone can follow no matter your background. Today, we're demystifying options trading, a powerful tool that can help you grow your money if you use it wisely. We'll show you how to approach it with confidence and clarity. Before we dive in, hit that subscribe button. Commit to your financial education and join a community of learners just like you. This isn't a get-rich-quick scheme. Real wealth takes knowledge, discipline, and courage. It's about building habits and making informed decisions over time. My goal is to make options trading clear and approachable, step by step, so you can feel empowered to take action and not just watch from the sidelines. If you've ever felt intimidated by financial jargon or overwhelmed by charts and numbers, you're in the right place. We'll break it down together. Options aren't just for Wall Street pros. They're tools anyone can learn to use, whether you're a student, a working professional, or planning for retirement. We'll break it all down so you can make smart choices for your future and start building the financial confidence you deserve. Get comfortable, grab a notebook, and let's start your journey to financial freedom together. Take notes, ask questions, and don't be afraid to revisit concepts. Remember, you claim your financial power by learning and asking questions. The more you engage, the more you'll grow. Let's unlock the secrets of options trading so you can take control of your financial future one step at a time. Let's get started. Let's start with the basics. What is an option? If you've ever wondered how some investors make money in the stock market without actually owning shares, options are a big part of that story. They're a unique financial tool that can seem mysterious at first, but once you understand the basics, they open up a whole new world of possibilities. An option is simply a contract that gives you the right, but not the obligation, to buy or sell a stock at a specific price within a set time. This means you have a choice, not a requirement to make a move in the market. Think of it like putting down a deposit to lock in a price on a house. You're reserving the right to buy that house at today's price, even if the value changes tomorrow. If the house price goes up, your option is valuable. If it drops, you can walk away, only losing your deposit. This flexibility is what makes options so appealing to many investors. In options trading, that deposit is called a premium. It's the price you pay for the opportunity to make a decision later, rather than locking yourself in right now. You're paying for the right to make a choice in the future, control and flexibility for a small upfront cost. This can be a smart way to manage risk or to speculate on where you think the market is headed. Options let you control a large amount of stock for less money than buying shares outright. With just a fraction of the cost, you can participate in the potential gains of a stock's movement. It's a way to bet on a stock's direction, up or down, without huge capital. This leverage can amplify your returns, but it also means you need to be careful and understand the risks. If the stock moves in your favor, your option can be very profitable. The gains can be significant compared to your initial investment, which is why options attract so much attention. If not, your loss is limited to the premium you paid. Unlike buying stocks outright, you know exactly how much you could lose from the start, making it easier to manage your risk. Options are about choice and leverage, not obligation. They give you the power to act, but never force you to do so. They're powerful tools for those who understand them. With the right knowledge, options can help you hedge your investments, generate income, or simply add flexibility to your portfolio. You're not buying the stock. You're buying the power to choose. That's a subtle but important difference, and it's what makes options so versatile in the world of finance. That's the core of options trading: unlocking new strategies, managing risk, and giving yourself more ways to participate in the market without ever being forced to make a move you don't want to make. Now, let's break down the two main types of options: calls and puts. These are the building blocks of options trading, and understanding them is essential before you dive deeper into the world of financial markets. A call option gives you the right, but not the obligation, to buy a stock at a set price within a certain time frame. This can be incredibly useful if you believe the price of the stock will rise in the future, allowing you to lock in a lower purchase price and potentially profit from the increase. Think of it as calling the stock to you at a bargain. You're essentially reserving the right to buy shares at a price you choose, regardless of how high the market price climbs. If the stock price goes above your strike price, your call option gains value. This means you could buy the stock at a discount and either keep it or sell it for a profit. A put option is the opposite. It gives you the right to sell a stock at a set price, again within a specific time period. This is valuable if you expect the stock's price to fall. Use a put if you think the stock will drop. It's like putting the stock onto someone else at a higher price than the market is offering. This can help you limit losses or even profit when prices decline. Puts can also act as insurance for stocks you already own, protecting your portfolio from unexpected downturns. Many investors use puts as a safety net during volatile markets. Calls are a bet on the price going up, letting you benefit from bullish trends and market optimism. Puts are a bet on the price going down, ideal for bearish markets or when you want to hedge against losses. Both calls and puts let you profit from market moves without actually owning the stock outright. This flexibility is what makes options so powerful for traders and investors alike. Remember, calls are for optimism and growth, while puts are for protection or when you expect a decline. Each serves a unique purpose in your trading strategy. Mastering these basics is the first step to smart options trading. With a solid understanding of calls and puts, you're ready to explore more advanced strategies. Let's keep going. Every option has two key details: strike price and expiration date. The strike price is the agreed price at which you can buy, call, or sell, put the stock. It's the target your option is built around. The expiration date is the deadline. After that, your option is worthless. Options can expire in days, weeks, or months, but time always matters. The more time until expiration, the more expensive the option, because there's more chance for the stock to move. You're not just betting on direction, but also on timing. If the stock doesn't move as you hoped before expiration, you lose your premium. Understanding strike price and expiration is crucial to using options wisely. Always know these details before you trade. Let's see options in action with a real-world example. Imagine Future Tech Corp trades at $50 per share. You expect a big product launch to boost the price. Instead of buying 100 shares for $5,000, you buy a call option with a $55 strike price, expiring in 1 month for a $200 premium. Now you control the potential upside of 100 shares for just $200. If the stock jumps to $65, your option lets you buy at $55 and sell at $65, netting $800 after costs. That's a 400% return on your investment. If the stock stays below $55, your option expires worthless, and you lose only the $200 premium. Your risk is capped, but your reward can be significant. This is the power of leverage in options. You risk less but can gain more if you're right. Always remember, your maximum loss is the premium you pay. Options aren't just for speculation, they're also for protection. Suppose you own 100 shares of Future Tech, bought at $30, now worth $50. You want to protect your $2,000 gain but don't want to sell. You buy a put option with a $48 strike price, expiring in 2 months for $150. If the stock crashes to $35, your put lets you sell at $48, locking in your profit. If the stock rises, your put expires worthless and you only lose the $150 premium, like paying for insurance. Protective puts help you manage risk without giving up long-term positions. Think of it as a safety net for your investments. You hope you never need it, but you're glad it's there if things go wrong. Options can be both offense and defense in your portfolio. Use them wisely to protect what you've built. That's smart investing. So, why use options at all? First, leverage. Control more with less money, amplifying potential returns. Second, defined risk. Your maximum loss is always the premium you pay. Third, protection use, puts as insurance for your stock holdings. Options let you profit in any market direction and manage risk strategically. They're not just for gamblers, they're for smart, disciplined investors. But remember, options require knowledge and respect for risk. If you're learning something new, hit subscribe and support our channel. We're here to empower your financial journey. Now let's talk about the risks you must understand. Options offer big rewards, high returns, flexibility, and protection. But the risks are real and must be respected. The biggest risk options expire. If the stock doesn't move as you hoped in time, you lose your entire premium. Many options expire worthless. This is common. Volatility can swing prices fast, making options risky and unpredictable. Leverage cuts both ways. Small stock moves can mean big option losses. Never trade with money you can't afford to lose. Options are not for your emergency fund or retirement savings. Start small, learn the ropes, and always have a plan. Emotional trading leads to mistakes. Stick to your strategy. The market rewards discipline, not hope. Respect the risks, and you'll be a smarter investor. Let's finish with some practical tips. Ready to start? Here are your first steps. Educate yourself. Read, take courses, and use a paper trading account to practice risk-free. Start with tiny amounts of real money. Focus on learning, not earning. Stick to simple strategies. Buy single calls or puts until you master the basics. Avoid complex trades until you're truly ready. Always have a plan. Know your entry, target, and exit before you trade. Write down your reasons and stick to your rules. Don't let emotions drive your decisions. Thank you for joining Tech Monetize Official. Today you've learned the basics, key terms, examples, and risks of options. Your financial education is just beginning. Keep learning and growing. Subscribe so you never miss our next video. Be smart, be strong, and take control of your financial future.